Hello and welcome to the February edition of the Dairy Market Update. This month, we'll be looking ahead at the key dynamics that are expected to impact the dairy industry during 2019. Weather was the main driver for milk production and markets across the globe last year, with only some of the impacts coming to fruition now. EU and Australian milk productions have both been impacted by periods of hot and dry weather. Tight feed supplies and rising production costs have put pressure on producer margins. As a result, it is expected that growth in EU milk production for 2019 will be modest at 0.9%, while Australian milk production is expected to drop by 1%. Meanwhile, exceptional weather in New Zealand has pushed up milk production in 2018 to record highs. These weather conditions are unlikely to repeat themselves in 2019, and so production is unlikely to match last year's volumes, meaning that growth in milk production is expected to be relatively modest at 0.5%. Overall, global milk supplies are expected to increase by 1% in 2019, the equivalent to an additional 2.8 billion litres. With global demand expected to rise by 1 to 2% in 2019, this may put some upwards pressure on prices. We have seen some extreme swings in butter prices over recent years, and this has proved too much for some butter buyers, with a number of food manufacturers looking to reformulate products to remove or reduce their reliance on butter. Though consumers continue to show a preference for butter, high retail prices have dampened sales volumes. Collectively, these factors will be slowing growth in dairy fat demand in 2019. In the most recent sales of skim milk powder and intervention have all but cleared out stores. With only 4,000 tonnes left to sell, we expect that skim milk powder prices will recover from the lows seen over recent years. Rising skim milk powder prices are likely to take some pressure off of butter prices. In order for butter and powder production to provide a competitive return, butter prices will not need to be as high as they have been over the past couple of years. Looking closer to home, the most recent farm gate milk prices from November are tracking above the 5-year average by over 4 pence per litre. However, those prices have come under pressure recently, with a number of price reductions announced from the beginning of the year. Adding to matters, on-farm input costs are on the rise. Feed costs in particular have risen significantly following the summer drought, where many producers have chosen to feed winter feed stocks to maintain milk productions, which has only compounded pressure on producer margins. Finally, Brexit continues to dominate people's minds. While the final outcome is unknown, it is expected that there will be further volatility in currencies, and businesses throughout the supply chain will be managing risks through the building of stocks and the domestic sourcing of product. As we have seen, there are multiple conflicting factors that could come into play in dairy markets over the course of the next year. AHDB, we will continue to monitor markets as they develop. If you'd like to sign up for regular updates from the Market Intelligence team, please visit our website.